Hello, everyone. Thank you so much for joining us. It is 6:30, so we're going to go ahead and get started. We know that we'll have people joining us throughout the webinar, but I just wanted to go over a few housekeeping rules. The first one, please stay on mute. We will be monitoring the chat feature, so if you have any questions or comments, feel free to use the chat, and we'll make sure we'll circle back to you at the end during our question and answer part of today's agenda. The second thing is this webinar is being recorded, so feel free to leave your camera off. If you want to turn it on, that's fine, but we do want to give everyone a heads up that we are recording. And then last but not least, just thank you. Thank you for joining us. Thank you for being here, taking time out of your evening to just listen to some of the important information and resources that we have to share. We'll start with updates on the Earned Income Tax Credit from Delegate Palakovich Carr, and she's also going to be covering the child tax credit. After that, we will have an overview of the childcare voucher and parent resources from Nea Abrams. Then we will hear about the daycare tax credit from our very own Kyarah Mair. And then we will hear about homeowner and renter tax credits from Francine Hyman. We will wrap up with information on some bucks from Veronica, and then we will close and make sure we have time for your questions at the end. Again, feel free to drop your questions in the chat throughout the session, and we will circle back to them. Before we get started, I just want to introduce myself. I am Nea Moore. I am the Director of Policy with the Cash Campaign of Maryland. CASH stands for Creating Assets, Savings, and Hope, and we promote the economic advancement for low to moderate income individuals and families in Baltimore and across the state of Maryland. I'm going to just get us started because we have a lot of information and we tried to squeeze everything into 1 hour. But before I turn it over to Delegate Palakovich Carr, I just want to share a little bit of information about her. Delegate Julie Palakovich Carr serves on the House Ways and Means Committee, where she has championed tax reforms to help working Maryland families, and she also chairs the Early Childhood Subcommittee. She has represented the 17th District in Montgomery County since 2019. Delegate Carr has been a strong advocate for the cash campaign, and some of our close networks of partners always champion the policies that are important to the cash campaign and the clients that we serve. So thank you, Delegate Palakovich Carr, for all of your work and for being here with us this evening. The floor is yours.
Thank you. Well, it's great to be with everyone tonight and to provide some information about a couple of tax credits that really can be valuable opportunities for working families in Maryland. So I'll say, as one of the members of the Maryland State Legislature, my job a lot of the time involves helping to create and write the laws for our state of Maryland, and to influence tax credits like the ones we have here. So it's actually really fun to be on the other side of this with this all-female panel, which is amazing, to really do some outreach on how these credits can help you and your families. So we'll go ahead and go to the next slide, please, Rachel. We're going to kick off with the Earned Income Tax Credit, also goes by its acronym, the EITC. Next slide. So this is a tax credit that really is a very valuable opportunity for people who work. And we're going to get into the specifics and the nitty-gritty of eligibility for this one. But really, overall, the purpose of the Earned Income Tax Credit is to boost the income of low and middle income workers. Now, notably, this is actually potentially up to 3 tax credits you might be eligible for. There is a federal credit, there is a credit from the state of Maryland, and for folks who might be on tonight who are from Montgomery County, there is also a Montgomery County credit. So you potentially eligible for all 3 of those. And this really is a very valuable credit. Depends on your income, your household size, number of children, a variety of factors. The amount of the credit can vary. But at its maximum, it was worth up to almost $12,000 for the taxes that we would have filed this spring for the year 2024. And for Montgomery County residents, there was a couple thousand extra in tax credits available. So again, we're talking about potentially up to $14,000. Next slide. So I want you to keep your eyes on the prize in terms of that, because this is a credit that is unfortunately a little bit complicated in terms of the rules for eligibility, but it is definitely worth spending a few minutes to look into whether or not you are eligible for it, because it is one of the most generous tax credits that's out there for people who are working and have earned income. Next slide. So I'm going to go through over several slides here what the eligibility is for the Earned Income Tax Credit. As you might guess from its name, and as I've said repeatedly, this is a credit that is targeted at people who are working and who have earned money through work. Now, thankfully, the credit at the federal, state, and local level does have a pretty broad definition of what work is. So it's not just people who have a salaried job or job where you're earning an hourly wage, those definitely count. But even if you're doing freelance work, if you are babysitting or walking dogs, that counts as earned income. If you own your own business, or if you're selling things, say on eBay or Etsy, that also counts as earned income. So as long as you have at least $1 of earned income, you're going to be eligible for this credit. Now, this credit does have a cap on the amount of income that you can earn. And once you're above that cap, unfortunately, you're no longer eligible for this credit. We'll go into more details in that in a moment. But I will just note right now that there are several types of income, more passive types of income, that don't count for the purposes of this tax credit. So alimony or child support, pension, certain government benefits don't count. It really is income that is tied to work. Next slide. So there's a lot of information in this table, but the way that you'll look at it is if you are married and you file your taxes with your partner, I want you to look at the far right column that's titled married filing as married filing jointly. If you are not married or don't file taxes with your partner, you're going to look in that middle column. That is the maximum amount of income that you can have in a given year and still be eligible for the earned income tax credit. So it varies depending on the number of dependent children that you have. So the more children that you have, the higher your income can be, and you can still get this tax credit. These income levels, I will note, do rise. Generally, the government does increase these thresholds from year to year. So if you're on the cusp right now, it is possible that maybe next year you're going to be eligible for it. Next slide. Okay, so beyond what is allowed as income to count towards this credit, there are also rules about what types of income might disqualify you from getting the earned income tax credit, and that would be investment income. If you have more than $11,600 in investment income, so that's income from, say, interest on bank accounts or dividends from CDs. If you own a rental property and say you're a landlord, those sorts of things, selling stocks, etc. So if you have more than that amount of investment income, unfortunately, you're not eligible for this credit. Next slide. And I know this is a lot of information. I'm going to actually, in a few slides from now, give everybody a nice, easy way to determine their eligibility, but we'll just walk through the remaining rules here. There are age criteria for this tax credit as well. In general, if you are age 25 to 65, you're good to go. If you are younger than age 25, for the federal tax credit, you are not eligible unless you have a child. Now, that's not true for the Maryland credit. Again, we'll walk through some of this a bit later. But there are those age criteria. You also need to live in the United States for at least half the year, and you can't be claimed on someone else's taxes as their dependent. For instance, if you're a college student and your parents are still saying on their taxes that they're financially responsible for you, you would not be eligible for the credit. And then there are some rules in terms of children as well, but just know that even for kids who are potentially college age, you might still be able to claim them for the purpose of the credit. Next slide. And the last bit on eligibility here is in terms of immigration status. Unfortunately, the federal government for a long time now has said that in order to get the earned income tax credit, you have to have a social security number. That's true for yourself, for your spouse, if you're filing your taxes with them, as well as for any dependent children. Now, I'll note that the Maryland tax credit, we are more flexible in that regard. Not having a social security number does not disqualify you. So we do allow for immigrants and mixed status families to get the state credit. Next slide. Last point is if you are divorced or separated from your spouse, do you know that there are some special rules around the earned income tax credit in terms of only one parent being able to claim the credit for the child, but the other parent might still be eligible, but just some other information here. And next slide. So how do you get the earned income tax credit? You get it by filing your federal and state income tax returns. It is a refundable credit, which means that you get a refund check, which is really nice. So again, potentially up to $14,000 being sent back to you by the government, which is amazing. And I will note, if you find out that you are eligible for this credit and you realize you didn't claim it in, say, last year or the year before that, you actually can go back and file an amended tax return, potentially up to 3 years prior, to get your earned income tax credit for those prior years as well. So this is, again, really a credit that's worth looking into because of how much money is potentially at stake. So we'll go to the next slide, please. I do just want to, highlight again that Maryland, where we have been able to be more flexible on people being able to participate in our state's earned income tax credit, in addition to the federal credit, we have been flexible and in order to include more people. So if you don't have a Social Security number, or your spouse doesn't, or your child doesn't, and you're disqualified from the federal earned income tax credit, I will note that that is not a disqualification for the Maryland credit. You can still get the Maryland credit in that case. For instance, if you have an ITIN, an individual taxpayer identification number. The other group where we have expanded our state credit to, who get excluded from the federal credit, is if you are under the age of 25 and you do not have dependent children. You can still get the Maryland credit in that circumstance. Next slide. So that was a lot of information. Like I said at the top, this is a credit where it does have very, complicated eligibility criteria. But thankfully, there are some really good and easy to use tools that can help you determine your eligibility. So I included some QR codes here. The top one will take you to an IRS website where you can go through and answer questions about your potential eligibility for the federal credit. And then I did the same from the Maryland Comptroller's office. And I'll just note that, it will ask you a decent amount of information, but it will give you a very accurate estimate of how much you may be able to receive for the earned income tax credit. And conversely, if you're not eligible, it will give you that answer as well. So I'll give folks a moment just to, open up their phones, get those QR codes and go to those websites. All right, let's go to the next slide. And I'm just going to walk through a couple of examples before we wrap up on the earned income tax credit about some hypothetical examples for a few families, just so you can get a sense of this credit. So for this first family, 2 parents, 2 kids, they make $50,000 a year. They actually are eligible for a $4,000 credit between the federal and the state credits. And if they lived in Montgomery County, they can get an additional $745. So it is a pretty significant credit. Next slide. And as I mentioned, this credit does vary based off of the size of your household as well as your income. So in this next hypothetical situation, it's a single parent with 1 child, and their credit's actually larger than that last family. This hypothetical family, they make $30,000 a year for that, 2-person household. They're looking at a credit of almost $4,600 between the federal and state credits, and as well as the additional credit from Montgomery County if they live there. And then next slide. And our last example here would be a college student under the age of 25, no dependent children. They're not eligible for the federal credit, but this person, and I made an assumption, makes $15,000 a year. They would be eligible for a credit from the state as well as from Montgomery County if they were a county resident. So that's just a few examples of how the earned income tax credit might work out for different families. Again, I really encourage folks to use those online tools to figure out if they are eligible and how much money that they might get at the federal and state levels. Let's go ahead and go to the next slide. And we're going to switch gears, and I'm also going to talk about the child tax credit. Next slide, please. So this is a tax credit that is focused on families who have children. It is both a federal credit and a state credit. There's no local one for me to talk about this time. Potentially, if you are in the universe of folks who are eligible for both the federal and state credits, it's worth $2,500 per child per year. Next slide. So I will note that on this one, the federal credit and the Maryland credit are fairly different in terms of who's eligible. We're going to start with the federal credit because it is pretty broad and most families are going to be eligible for this one. First of all, you do need to have a child who is under the age of 17 who lives with you for at least half the year. They have to live here in the United States. You have to claim them as a dependent, and they do have to have a Social Security number. The child does. That's the current rules. I think the speaker who's going to come after me is going to talk about what's changing, given some recent changes in federal law. But this is what current law is right now. Next slide. There are also income limits, so both on a minimum and maximum, but it is a pretty wide range of income. So a minimum of $2,500 a year of income and a maximum for, say, a married couple of $400,000. So again, this is a pretty broad swath of American families are eligible for this credit. And I will note that if you are above those income thresholds, you can still get a partial credit. There is kind of a phase out for those higher income earners. So next slide, please. In addition to that federal credit, the state of Maryland also offers a state credit, the Maryland Child Tax Credit. And I was very proud several years ago to work with Senator Nancy King to get this tax credit established here in Maryland. And then more recently, we worked with Governor Moore and his administration to expand this credit. So right now, this credit is really focused on the lowest income earners in the state of Maryland, for families making less than $15,000 a year. Now, notably, unlike the federal credit, there is no minimum income. You can have $0 in income and still be eligible for the state credit. Next slide. Really, the criteria for the state is about, besides that low income level, is about your child. They need to be either fairly young, age birth to 5, or they can be up to age 16 if they have a disability. And then otherwise, same criteria as the federal credit, they need to live with you here in the United States. You have to claim them as a dependent. But importantly, because we had the flexibility at the state level, we do not require your child to have a social security number. They can have either an ITIN or a social security number. Same for the parents. So basically, anybody who's filing their taxes is going to be eligible regardless of immigration status or citizenship status for the state credit. So next slide, please. So for both the federal and state credits, you get these by filing your tax returns. And I will note that for the federal credit, it's a partially refundable credit. I realize that gets a little wonky, but it just means like part of it you can actually get as a refund check. The rest of it just kind of offsets whatever taxes that you might owe. And just like the earned income tax credit, if you have missed out on this credit, you can file amended returns looking back several years in order to claim the credits. Next slide. And again, just want to point out that if you are not eligible for the federal child tax credit, you may still be eligible for the state credit. So if your child doesn't have a social security number, you can still file for the state credit. I will also note that there is another federal credit called the credit for other dependents. These terms keep getting wonkier and wonkier. That one is up to a $500 credit, and that is for families who have a child who, say, does not have a social security number, has an ITIN, but it also can be used for older dependents, like adult dependents. So if you have an adult child who is disabled, in some cases, if someone is caring for an aging parent who you actually claim as a dependent, you can also claim this credit for other dependents on your federal taxes. And then again, at the state level, if you have very low income, you can still get the state credit, unlike the federal credit. Next slide. So that was just a quick overview on these. Happy to be of service to folks. If we have anyone here from Montgomery County, especially would love to hear from you if there's anything we can do to be of service. But otherwise, I'll be available for questions when we get to that point in the program. Thank you.
Alrighty, thank you so much, Delegate Palakovich Carr. We truly appreciate all of the information that you shared with us this evening. Next, we'll hear from Nea Abrams, who will walk us through Maryland's childcare vouchers and parent resource programs. Nea Abrams is the Parent Leadership Specialist at the Baltimore City Child Resource Center, located at the Family Tree. She has dedicated her career to early childhood development, working with children from birth to age 5. In her current role, she supports families with children from birth to age 3, advocating for the importance of early childhood and family support services. She also connects families to essential resources, including assistance with the Maryland Child Care Scholarship, guidance in finding quality child care programs, and referrals for SNAP benefits. Nea, please take it away.
Thank you so much for the wonderful introduction. So again, I'm just going to reintroduce myself. My name is Nea Abrams. I am the Parent Leadership Specialist at the Baltimore City Childcare Resource Center. Um, and my presentation today is about the Childcare Scholarship. So I know it's a lot of different names for it, so I just want to establish that the Child Care Scholarship is the same as the Child Care Vouchers or the Child Care Subsidy. The name just changed when it switched over to the Maryland State Department of Education. They have their own vendor um, that pretty much tackles everything as far as the processing with the scholarship. There are, in my little disclaimer, there are a lot of different pieces that comes with the scholarship. So today I'm going to give the really quick 10-minute version of it. I'm going to stay on time. Again, I'll be here at the end for any questions or anything if people need to pop in. However, but I'm going to give you guys the really quick version of it. So we're going to get started. So I'm going to stay on time. That's just my little welcome. This is my quick little disclaimer. My organization, the Baltimore City Child Care Resource Center, we are located at the Family Tree. We are a branch of the Family Tree as well, but we are not Child Care Scholarship. Like I said, that is directly through the Maryland State Department of Education. What I do in my organization is that we pretty much help people with the initial application piece of helping them apply for the scholarship and the documentation. So we are not able, I always get calls of people like, can you pull up my application? Can you look at this and check this? Unfortunately, I wish I could. I've tried to in the past, like, could I get access? But unfortunately, we could not. So we don't have anything to do with as far as the processing portion of it and how much families receive when they get that scholarship. We pretty much help with the questions, the navigation, application, documentation support with helping families with the scholarship. Sorry. Okay, perfect. So just some quick objectives for the day. I'm here to provide the basic information about the Maryland Child Care Scholarship application. We're going to quickly touch on some eligibility requirements. We're going to discuss, once you receive your scholarship, what does it cover? We're going to briefly discuss, how to apply for the scholarship. One of the most important pieces of the scholarship is the documentation, and as you'll see, standard documentation, and I'll kind of touch on that a little bit later. Why it's important, why does the scholarship matters, and then resources. Alrighty, so jumping right into it, who is eligible for this Maryland Child Care Scholarship? So parents with children from birth to age 12, when I mean birth 6 weeks up to age 12, with licensed child care facilities, the child has to be at least 6 weeks old to begin at a facility. The next piece is the income requirements. There is an income scale for families to meet, and it does depend on your household size. With that, it has changed about 2 or 3 times since May of 2022, where they actually up the income requirements. So a household of two, one parent and one child, as long as they make, I believe, under like $74,000 a year, they meet that income requirements. The next piece is that they have to be a Maryland resident, so they have to be living in Maryland to receive the Maryland Child Care Scholarship. The child must be a U.S. citizen, and it's emphasis on the child. The parent does not have to be a U.S. citizen, but the child must be. And then the next piece is that parents must be working and schooling. It does cover up to a bachelor's degree or an approved training program. That means if you're in a job training program to get like your certification or something, people who may be going for like a CNA or GNA certification, someone that may be going any kind of trade. So an approved job training program, it does cover that as well. And additionally, and I didn't mention this, even it does cover if you are self-employed as well. So self-employed people are able to apply for the Child Care Scholarship. The next piece, people receive the scholarship and they're like, what does it cover? Would it help me put my child in a private school? Or does it help them like in Catholic school? In that kind of capacity. And it does not in that sense. It covers a licensed child care center. That's what we have right over here. It does help come a licensed family child care professional or provider. These are people that provide child care in their home, but their home is licensed to provide this. They have to meet with the requirements with the Office of Child Care to get their license for a licensed child care center. Again, that's over here. That's just child care in a commercial building. And then the last one it does cover is informal relative. And this piece is called non-relative childcare. So that's if you have a family member, such as a grandmother, an aunt, uncle, a great grandparent, a cousin, or someone that is able to provide childcare for your child. The stipulations with informal providers, it does get not more tricky, but it is a different process. It can be a bit of a longer process, and there are other requirements for an informal provider to provide. And again, Childcare Scholarship works with families. I work with families kind of on that other end as far as with the informal piece. The next piece is how to apply. There is an online portal application. That is the website is money4childcare.com. That is where you go to apply. Previously, before the thing changed back in 2022, 2023. It actually switched over to the online application. They don't traditionally accept any or no longer accept paper applications. That was prior via email. All of their applications are online now through a portal. You would create like a username, a password, and everything happens through that portal now. The next piece, I say documentation is everything, because this is the biggest component, the biggest piece of the child care scholarship, where people typically face denials. And this is, again, the very standard documentation. The documentation, there is standard documentation for all of it, but things can change, and those pieces of documents can change depending on the family circumstances. With all the families that I work with, I typically do their pre-screening first to make sure that they're eligible, and then we kind of go over the documentation that they need to support, their situations. But again, these are the very basic, the very standard, and it can change. There is also certain forms that may need to be completed if some of these if families do not have some of this required documentation. And I can just go over really quickly. So you will always need to have proof of activity. Again, that's going to be work, school, or that approved job training. You're always going to need some type of proof that you are doing something essentially. Proof of all other income. So if you're receiving any like state benefits, such as SSI, if you're receiving WIC, if you're receiving SNAP, proof of that will be included as well. They're always going to ask for proof of identification. For children, it is always going to be the birth certificates. It's no social security cards, no really workaround with that one. But they'll need the birth certificates for their children, and then of course identification for the parent as well. Proof of Maryland residency. Again, that one gets a little bit tricky, and it kind of specifies it for you. But you have to prove that you are living in Maryland, whether the address is on your ID, a utility bill, a lease agreement, something to prove that you are a Maryland resident. And like I said, that's just kind of the standard documentation. And again, why does it matter? Why does a child care scholarship matter? Why is it so important? It does provide accessible to high quality child care. It may cover the full amount of child at a child care facility, depending on how much the family is awarded. It may cover 50%, 20%, 85%. So it really helps to ensure that that child is receiving access to high quality child care. It helps to ensure that parents can be able to balance their career and or schooling. The number one question you get is, how am I supposed to work, whether I'm home or in the office and I don't have, any child care? So it does help provide with that. It supports a child's development in every capacity, social, emotional, their cognitive development. So as soon as, you can get them around other children, their social development, which is a very big one, it helps support that as well. Lastly, it encourages the use of a licensed and safe professionals, so you feel comfortable. Again, some people may not feel comfortable with sharing them outside their families. Going to a licensed facility where you know that these people have been vetted, they have been fingerprinted and background checked. It also helps provide that safety so parents can work or do their schooling or pursue whatever professional career they have while they know that their child is safe. Resources. Me. I am the one with the resources. I would love to have you if you were interested in applying. My email address and my work cell number. I work with, whether you email me, call me, or text me, I try to provide I'm pretty quick with my response, I would like to say, but I would love to have you if you have any questions or ever interested in applying. Um, thank you, Jordan. And then the Maryland Department of Education, again, that's their phone number. They do not provide, I will say, like that one-on-one kind of assistance because they do have a very, very high call volume. People are consistently calling them, all day. So they're not able to kind of sit on the phone and kind of walk through that application with you and everything. But they are a great resource if you have any questions. It is their application. The name of that vendor is called CCS Central 2. That is their contact number. It can also be found on the website, moneyforchildcare.com as well. All right. Now this is kind of like the womp womp of the child care scholarship right now. There is a temporary enrollment freeze. On May 1st of 2025, the Child Care Scholarship Program did issue a temporary freeze on any new families that are enrolling in the Child Care Scholarship. Essentially what happened was that there was a big pot of money, luckily, that was put into the child care scholarship. And with that, it was able to increase the income requirements and make changes. One of the big pieces that child support was no longer a requirement for the Maryland Child Care Scholarship, which is one of the big hiccups that families ran into. Prior to that big increase, there was only about 21,000 children on the scholarship. However, since then, that has doubled, and now we're looking at over 45,000 people as of 2025, and it's only July. And as a result of that big increase, the program had reached its maximum budget capacity. The freeze was necessary to ensure that the families that are already receiving the scholarship to continue to be supported. What I encourage, and Child Care Scholarship as well, is families still being able to apply. The application, it will be reviewed, it will be processed, and if they qualify, they will be added to that frozen status list. As people, like I said, graduate or come off the scholarship, they will start being able to add newcomers on the scholarship. However, or if they lift the freeze and there's more money there or anything happens like that, then they'll start issuing scholarships to those families that are already, on that waiting list. But I always encourage parents still apply because they may contact you in a month, 2 months, whenever to say, hey, it's your turn. Let's go ahead and get you, your scholarship and have me moving forward. All right, 7:02. I think I did it. That's pretty much the end. This is my flyer. It kind of explains briefly like the services I provide on my parent coalition. I work with a parent coalition from parents birth to 3 with a lot of advocacy work on the importance of family supports. Again, my resources as far as helping with the child care scholarship, the SNAP referrals, and helping parents find licensed childcare in Baltimore City. It has my contact information, and I'll be here for questions at the end. And thank you guys so much.
All right. Thank you so much, Nea. Now let's hear from Kyarah Mair, who will share details on the Maryland Daycare Tax Credit and how it can support families with young children. Kyarah is a senior program associate for tax operations at the Cash Campaign of Maryland. For the last 4.5 years, Kyarah has assisted hundreds of individuals and families with accessing free tax preparation and asset building services. Kyarah manages a VITA site at the Enoch Pratt Library and the Cash Campaign's Back Tax program. She has also helped develop curriculums for tax training and administers training for site managers and advanced level preparers. Kyarah, over to you.
Thank you, Tanea. I'm excited to be talking about an additional tax credit that is available to families. I call it the lesser known cousin of the child tax credit, but that's going to be the child independent care credit, also known as the daycare credit. Next slide, please. So a few things I want to go over. The daycare credit offsets the cost for the care of qualifying individual to enable the taxpayer to work or actively look for work. So any child care expenses that a taxpayer and their spouse, if they are married filing jointly, incur in order to work or look for work is eligible. And we'll go over in more detail what those expenses include. I also want to highlight that the credit received is a percentage of the amount of expenses paid and depends on your adjusted gross income. So for one qualifying child, that's $3,000, and for 2 or more, it's $6,000 in childcare expenses. And it's up to 35% for the current tax year. but that will be changing due to the One Big Beautiful Bill that was passed earlier this month. That'll go up to 50%. And lastly, I want to highlight, unfortunately, this credit is not like the credits mentioned earlier, the earned income tax credit and the child tax credit. This one is non-refundable. So it's not as powerful as the other two credits we discussed earlier, but it can help reduce your tax bill down to zero. Any amount that's left over after that is not refunded to you. Next slide, please. So the general eligibility of the daycare credit is that the expenses must be paid for the care of a qualifying person to allow the taxpayer and spouse, if married filing jointly, to work or look for work. That is key. So this does not include, needing a night off and paying for a babysitter or taking a vacation without the kids. It's just to work or look for work. The taxpayer and the spouse must have earned income. Your filing status cannot be married filing separately. You are penalized if you file a married filing separate return. This is one of the ways that you are penalized. This credit becomes, you become disqualified for this credit. And lastly, you have to be able to provide the care provider's name, their address, and their employer identification number if it's a licensed child care provider with a business number, or the social security number if it's more informal care from, let's say, a relative or a neighbor. Next slide, please. So we'll talk a little bit more about what a qualifying individual is. There are a few ways to meet that. One, and the most common, is having a dependent child who's under the age of 13. So that'd be between ages 0 to 12. It could also be a spouse who is incapable of self-care, or an individual who's incapable of self-care. Can be any age that live with you more than half of the year. So I mentioned this incapable of self-care. The way the IRS defines that is if the individual is incapable of caring for his or her hygiene or nutritional needs, or if they require the full-time attention of another person for the individual's own safety or the safety of others. The next slide, please. There is a dollar limit. I did mention this briefly on the general overview, but the eligible expenses used to claim the credit cannot exceed $3,000 for one qualifying individual, or $6,000 if there's two or more qualifying individuals. And this will remain the same for next tax year as well. Next slide, please. So eligible expenses, there are things that count, there are things that don't count. So the things that are eligible would be your before and after care school programs, payments made to licensed childcare providers or informal childcare providers. There are some exceptions that apply to that. I'll mention that on the next slide. And daytime summer camps. All right, next slide, please. So some things that do not qualify would be payments made to the taxpayer's spouse, their dependent, or their own child under the age of 19. So I mentioned previously that you can pay relatives, but you're limited in who those relatives can be. So it can't be the spouse, someone you're claiming as a dependent, or your own child that's under the age of 19. Another ineligible expense would be school tuition. So K through 12 expenses that you incur, that does not count. And day camps count, but overnight summer camps do not. So it's just important to keep those in mind. Next slide, please. All right, so just like the earned income tax credit and the child tax credit, there are Maryland benefits. We're fortunate to live in a state where we support families and we offer a state level credit. The daycare credit is no exception. So there is two benefits that you can receive on the state return. The first is a subtraction from income. So the way that a subtraction from income works is it just reduces your taxable income to figure your Maryland adjusted gross income. So if you were eligible for the daycare credit and you incurred expenses for childcare, then you can claim that as a subtraction from your income. So again, that same limitation applies. $3,000 for one qualifying child, or excuse me, one qualifying individual, or $6,000 if you have two or more dependents that receive care. Another benefit on your state tax return would be a credit. So this, what we've been talking about before, it is refundable at the state level. So if you're eligible for the daycare credit on your federal return and your income is below a certain threshold, you are entitled to the tax credit equal to a percentage of the federal credit. I believe it's about 32%. All right, next slide, please. All right, so as Tanea mentioned, I do work with the cash campaign. Just wanted to do a quick plug to share some resources that are available to families out there making under $67,000. VITA stands for Volunteer Income Tax Assistance. It's a free tax preparation service. And again, the only catch is you have to make under $67,000. It's completely free. There are no strings attached, no hidden fees. And just FYI, our income limit will be increasing for next tax year. So for tax year 2025, our income limit will be $69,000. Next slide, please. We have tax sites all across the state of Maryland. We are based in Baltimore, but we don't stop there. We have a presence in most of the 24 counties. You can use the VITA locator tool to find a site near you, or you could visit our website, bemorefreetaxes.org, to find a site across Maryland. Next slide, please. Thank you. We also have a back tax program. So when tax season stops, we don't stop there. We keep going through September each year. So our back tax program, we can help with tax years as far back as 2019. And if you need to make any corrections, which was mentioned earlier in the earlier presentation, if you missed out on a credit, you can file an amendment, and we are more than happy to help with that. Again, just visit our website, bemorefreetaxes.org. You can fill out our interest form, and we'll get connected with you right away. Next slide, please. Thank you. I will also be available for questions at the end of the presentation, and I'll pass it back over to Tanea.
All right, thank you so much, Kyarah. We'll now turn it over to Francine Hyman for a breakdown of the homeowner and renter tax credit programs. Francine is the director of the SOAR program with Economic Action Maryland, where she connects older adults with vital community resources, including tax credit support, benefit screening, and financial counseling. With a background in direct service work throughout Baltimore City and degrees in social work and aging services management from UMBC, Francine brings both compassion and real-world savvy to her role. Francine, you have the floor.
Hi, thank you so much, Tanea. Thank you for having me. Again, my name is Francine Hyman. I am the program director of our SOAR program, and SOAR stands for Securing Older Adult Resources. So we're going to chat a little bit about the renters and the homeowners property tax credits and why this matters. I'm sure we're all aware rising housing costs and caregiving costs impact working families and older adults across Maryland. A lot of clients that we encounter say they have never heard of the tax credits, although they've been around since 1965, 1970, but many eligible Marylanders have never even applied. And a big misconception that I often hear from clients is that these are loans, they have to pay it back. So the messaging there is that there are credits and refunds to help you stay afloat. A little bit of a program overview. We'll start with the homeowners. The homeowners property tax credit helps reduce property tax bills for homeowners with low to moderate income. The credit is based on income, your assessed property value, and taxes paid throughout the year. It may result in a refund if you've already paid your property taxes. For renters, the refund is for qualified renters based on the rent paid when compared to the household income. June 2023, the program was expanded to allow retroactive applications. What that means is if you are 70 plus and have never applied, you are now eligible to apply for 3 years retroactively. Renters can return or can receive up to $1,000, but again, it depends on your income when compared to your rent. For homeowners, you must own or have a legal interest in the property. You must be living in the home at least 6 months out of the year, which includes July 1st. And the income limit, which is $60,000, is the combined gross household income. So if you're a married couple, the income cannot exceed $60,000. If you're a mom and child, again, the household income cannot exceed $60,000. And you must submit a copy of your prior year's federal tax return if you are required to file. If you aren't required to file a tax return, you can submit unemployment statement, you can submit Social Security statements, retirements, or pension statements. Special notes, if you recently purchased your home or are in the process of purchasing your home, you should also qualify and you should also complete the application. If you reside in a skilled nursing facility, but you were in your home for 6 months of the current year, you should also complete an application to confirm your eligibility. You must not have received the credit already for the same tax year. Sometimes we have clients who in February, they receive the application from the State Department of Assessments and Taxation, and then they may run into us at a cash site and they apply it again, and then they receive a denial letter, but that's only because they've already applied once for the same year. The retroactive rule is also applies to homeowners. Again, if you are 70 or older and you have never applied before, you can retroactively apply for up to 3 years. There is not a separate application. You'll complete the current year's application, and once the processor confirms that you've never applied, they will then mail you the applications for, let's say, 2024, 2023, and 2022. You just have to prove your income. So again, if you have your taxes, you'll need your taxes for those years. If you have any statement from Social Security, you'll need that as well, or pension or retirement to prove income for those prior years. For renters, again, you must have been in your rental property for at least 6 months of the year, including July 1. You can be age 60 plus, permanently disabled, or a low-income family with a dependent under 18. You can also apply as a surviving spouse of an eligible renter. You'll need the same supporting documents, federal tax returns or Social Security letter, pension, retirement statement, but you'll need a copy of your lease if it's your first time applying, as well as any rent receipts. And again, proof of all household income. And we already spoke about the retroactive rule, but again, as of June 1st, 2023, you may also apply retroactively for previous years. Again, it's just the same application. And once the processor confirms that you've never applied before and you are 70 plus, they'll mail you the application for those years. This is our tax credit website, marylandtaxcredit.com, that we use to just confirm eligibility. So we can just run through a few examples. Just let me know, can you guys see the website?
Yes.
Okay, thank you. All right, so example 1 is you have an adult homeowner around 72, annual income is about $19,000. And again, we're looking at the assessed property value. So this homeowner's assessed property value is around $150,000 and they have never applied before. So usually what we'll do is we'll go to the website, we'll click on homeowner, and as you can see, there are no other eligibility questions. We'll scroll down to our calculator and we'll enter $19,000 for the household income. The assessed property value is $150,000. So according to the calculations, their tax limit should only be about $690. They could be saving $2,600. Now, we don't share this with the client while we're on site with them. What we do say is, you're eligible. Would you like us to assist you with the application, or would you like to submit it yourself? And the reason we don't is because the State Department of Assessments and Taxation, once they look at your taxes or your proof of income, they'll confirm the amount that you're eligible to receive. But again, this person should definitely apply. So they applied, they're eligible to apply, but because they are also 72 years old, once this application is processed, they'll also receive applications for 2024, 23, and 22. Now we can go back to the beginning and we can select a renter. So this is a couple, they're married with one child. And we can go through the eligibility questions. Are you 60 years old? No. Are you permanently disabled? This couple is not. Do you have one or more dependent under the age of 18? And do you not participate in a federal or state-sponsored housing subsidy program? That question there is tricky. If you are over 60, but you do receive Section 8 or live in a HUD-approved building, you can apply. Under 60, you're not eligible to apply. And again, we'll scroll down to the calculator. Their household income is $27,000 for the year. They're paying a monthly rent of $1,300. And then we have 3 people in the household. And as you can see, they won't be able to save anything by applying, although we encourage everyone to apply, but they won't save anything to apply because they did not meet the eligibility requirements to apply. But if they were permanently disabled, then they would receive up to $1,000. And again, that's just a check coming from their local Department of Finance. And that's only because they qualify under the dependents and the disability rules. So there are many more examples, but I do encourage folks just to play around with the website. Again, marylandtaxcredit.com, and just to see what different outcomes you or your clients could have. And this slide just refers to our supporting documents checklist. Again, everyone needs to prove income, whether that's a tax return, Social Security, pension, retirement, wages. The only difference is renters will need to submit a copy of their lease along with rent receipts. The application deadline. Again, the deadline is October 1st. The application season is from around February 14th through October 1st. Unless you're over 70, then you can just go ahead and apply at any time. And the retroactive credits are only for those 70 plus who have never applied before. And again, we are here to help. We're a small staff. It's myself, then we have Jamila Blake, who works with homeowners, Emily Fader, who works with renters, and we are fortunate enough to have 2 interns assisting us right now. The best way to reach us is through our hotline. Please allow about 48 business hours for us to return your call. Or if it's easier, please just email Emily if you're a renter, or Jamila if you're a homeowner, or if you need any assistance or you want to work through a client situation, you can email either Jamila or Emily, and they'll either get you to me or they'll respond if they're able to. All right. Thanks again for having me, and I am here to answer any questions.
All right. Thank you so much, Francine. Rounding out our speaker presentations is Cash's very own Ms. Veronica Crosby, who will share information on the Sunbucks program. Veronica is the program manager for tax and financial capability with the Cash Campaign. Sorry, 1 second. Sorry about that. In this role, Veronica provides direct services to clients who need to be connected to money-saving benefits and free tax preparation. Veronica has over 10 years of experience in human services, which includes program director and case management in the areas of housing, homelessness, and social services. Veronica is AFC certified, which means accredited financial counselor. Ms. Veronica, over to you.
Thank you. I'm going to discuss with you this evening the Maryland Sunbucks program. And what that is a summer nutrition assistance program that's provided to families through the Department of Human Services in partnership with the Maryland Department of Education and the United States Department of Agriculture's Food and Nutrition Services. And the Maryland Sunbucks program, what it does is it will provide EBT benefits during the summer months. to children that would normally receive free or reduced price meals during the school year. Each eligible child will receive $40 for June, July, and August, providing a total of $120 for the summer months. Part of the application process is that there is what's called a direct certification. So the direct certification is what the majority of the children that are eligible for the program will be under. What that means is that an application does not need to be completed by the parent or the guardian, as long as the child was receiving a benefit prior to since around July the 1st, 2024. Okay. So you don't have to do that application, and the benefits will automatically come onto the family's EBT card in the household. Just note that there is a age range for the children to be eligible. So most of the children that are eligible for the program, they are between the ages of 5 to 18 years old. They reside in households that receive SNAP, temporary cash assistance, or medical assistance at any time since July 1st, 2024. So those were individuals that fell into what was called the direct certification category. And the other group that fell into that same category are 5 to 18-year-olds that are in foster care or that are homeless, runaway, or child of a migrant worker. The eligibility criteria, one of the great things about this particular program through the state of Maryland is that a Social Security number, citizenship or alien status, and residency are not required in order to be eligible for the Maryland Sunbucks program. Most of the children in the state of Maryland participate in schools that are under the National School Lunch Program. And so those are the schools that are eligible for the Sunbucks program itself. Now, there are some children that are out there who do not fall into the category of being directly certified. So those children, their parents or guardians would need to fill out a application for Maryland Sunbucks. And that can take place on the Maryland Benefits Consumer Portal. And that's the application method that's strongly recommended by the Department of Human Services. And that application has become also mobile device friendly recently because of the updates that the Department of Human Services has made to the application itself. So it can be done on a computer, it can be done on a tablet, and again on a mobile device as well, such as your cell phone. And you are not required to have a Maryland or create a Maryland benefits account in order to do the application. If you are not comfortable in applying online, there are opportunities to submit a paper application at your local Department of Social Services office. You can do that in person or by mail or email, even fax. The offices still have fax machines at all of their DSS locations. And they do have a downloadable application on the website for Maryland Benefits as well for you to apply for the Sunbucks program. One of the things that I encourage a lot of my customers is that, especially if you had to apply for the benefit, you were not a direct certified household, that when you do receive your card, because those households will receive a white card for each eligible child, to please hold on to that card, because if the program takes place again next year, the benefits will be issued on that exact same card. So once the benefits have been used up for the summer, please do not discard your card for the program, because it will be used again to for EBT benefits for the summer program once more. The biggest thing to remember about this benefit, though, is that unlike the regular SNAP benefits that households normally receive, these benefits actually have a expiration, or what they call an expungement date. So when you receive this benefit, you only have 122 days from the date of issuance in order to use this. So for example, when benefits were issued for June, you have until October to use those benefits. After that, they will be what's called expunged, whereas the Department of Human Services will pull those benefits that were unused back. So for the July issuance, you have until November to spend that. And lastly, the month of August, that distribution, you have until December in order to spend that as well. And there are a lot of campaigns, a lot of advertisements that go out, as well as there are alerts that will pop up onto the Department of Human Services website, as well as their consumer portal, to give reminders as to when these expungements will take place, so that you make sure that you spend the benefits for your children during the months that you need it for. And that is pretty much it for the Sunbucks program. And I'm also available if you have any questions, and I'm going to turn it back over to Tanea.
Thank you so much, Miss Veronica, and thanks to all of our incredible speakers, and for being here with us this evening and sharing information. Now we will open it up for questions. I have not seen any questions in the chat. Well, actually, I do see one. Miss Veronica, this one is for you. Should I call? My son received a card on Monday. He's 19, out of school, and we do not receive SNAP or any of the other eligibility requirements. I'm thinking it's a mistake, although he was eligible for free lunch for the 2023-2024 school year.
Okay, and my question would be probably when did he turn? Let's see, was there a comment of when he turned 19?
June 3rd.
Oh, okay, June 3rd of this year.
Yes.
Yeah, that's probably why I got the disbursement, because he fell into that eligibility. They're looking at if you were eligible in the month of last year. They're looking at 2024.
Okay.
So when they looked at the eligibility time period, he met the age criteria at that point in time.
Okay.
So yeah.
Right.
So but this would be the last time of receiving them.
Got it. Thank you.
Yeah, but if you do feel uncomfortable, you can contact your local Department of Social Services, or you can actually call. Give me one moment, because I do have it in my notes. There is a telephone number that you can call that is directly set up just for the Sunbucks program. And here we go. The number is 1-800 332-6347, and I'll also put it in the chat as well. But that's set up for the Maryland Sunbucks program.
Thank you.
You're welcome.
Thank you so much. The team sent in another question. The question is, earlier this month, Congress passed the One Big Beautiful Bill Act. Will there be any changes to the tax credits mentioned that families should be aware of? Kyarah, would you like to take this question?
Yes, I would love to. There are some updates. So On the credit I mentioned, the daycare credit, the changes are relatively minimal. They're not super impactful, but there were changes to the percentage. So I mentioned earlier in the presentation, based off your expenses, a percent is then calculated to determine the credit amount. The maximum percent was 35% of either 3,000 or 6,000, depending on how many qualifying children or dependents you have. It's now up to 50%. So that would shift the maximum credit from $1,050 for one qualifying individual to 1,500. And then for two or more qualifying individuals, it would shift the maximum credit from 2,100 to 3,000. So that's in daycare credit. There were also changes in the maximum amount that employers can contribute to employer-sponsored plans. So I believe the max was 5,000 previously and up to 7,500. And then there were changes for the child tax credit. So previously, maximum credit at the federal level was $2,000, and the refundable portion of that was 1,700. With the act being passed, it's now going to be a maximum credit of 2,200, and the refundable portion will remain the same at 1,700. The credit will now adjust for inflation each year, which it did not previously. And another change is that dependents must have social security numbers, which was the same previously. And now this is new, at least one parent must have a social security number. So previously the social security number or I-10 status of the taxpayer did not matter, but it will now. So at least one parent must have a social security number, which will limit certain families from being able to claim the credit.
And if I can just add on to that briefly. So again, just as a reminder, that's the eligibility for the federal child tax credit. And that change for one parent needing to have a social security number does go into effect for this year. But for our Maryland child tax credit, we have not changed our eligibility. It does not change because of the federal changes. So a family where both parents have I-10 numbers, the child has an I-10 number or social security number, whatever the case may be, is still going to be eligible for the state credit.
Alrighty, thank you. There's another question. This one is for Nea. How long should families anticipate being on the frozen list for the scholarship?
So originally when they announced it, so they did it in May 1st. So they announced it May 1st of 2025 and said there will be a reevaluation come September. But that does not mean they'll be lifting the freeze. It does not mean that they will be just start issuing scholarships, unfortunately. It just means that they're going to go reevaluate the numbers and see if they have the capacity to start issuing it and seeing how many people are on the waiting list, honestly. I have not, so as far as people is moving off of the waiting list, I try to reach out to my families that I've worked with to see, like, if they heard anything back yet. But as of yet, no. I'll try to do another round like right before September, then I'll probably do something after September. We haven't gotten word again what that reevaluation will be or what it will look like. We just know they're going to be looking at it come September. I'm thinking personally, they're probably going to wait as they move back into session, because they have to, they have to see where the money is, and then again, how many families are still on it. So if families like don't complete redetermination or, following along with the other requirements for the scholarship, then they get kind of kicked off. So I guess that's what they're waiting to see. Yeah,
Okay.
it's hard.
Yeah. Thanks, Nia. I think there's a question for Francine. Kyarah, did you want to come off mute?
Yeah, so Francine, my question for you was, you mentioned that if a taxpayer is over age 70 and it's never applied before, they can retroactively apply 3 years. Does that never applying before, is that truly like ever having submitted an application, or what if they submitted one 10 years ago and haven't applied since? Are they?
Yeah, so they're sticklers about the never having applied before. But what I can encourage is maybe just attach a letter as a supporting document explaining why, because sometimes, you know, you're not listed on the deed. It was someone else's home. You inherited the home. So you can send them over to us, but maybe just submitting a letter to explain the situation of why there's a gap. I've seen it work once, but that was like an extraordinary case where the lady, she didn't apply in 5 years, but that's because the spouse passed and there were some other things going on. So you can always try that, but yeah, they tend to be sticklers on the never having been applied before. Yeah.
Good to know. Thank you.
All right, any other questions? You can put it in the chat or feel free to come off mute at this time. Just scan. No other questions for any of our speakers? Alrighty then. Well, this has been such a valuable conversation. Thank you again to everyone who joined us this evening. Please reach out and stay connected. CASH's website is www.cashmd.org. If you heard anything that you think would be helpful to someone you may know and people who were not able to join us this evening, please share the video on our Facebook. Our Facebook is Cash Campaign of Maryland. Thank you again for joining us and have a great evening.